Hi friends, welcome to the new episode of A Digital Tomorrow. Today I have the huge pleasure of having with me Syed Musheer Ahmed. Musheer, welcome to my show.
Thank you so much, Dr. Oriel, for having me here.
No, it's actually my pleasure to be able to have you today. And well, for those of you who might not know Musheer yet, even though he's very well known, but if there is anyone out there who doesn't know him yet, Musheer is the founder and managing director of FinStep Asia, which is building Asia's next generation of businesses and providing advisory on fintech and digital ecosystems in Asia. Aside from that, he's also a board member and co-lead of the Islamic FinTech working group at the Global Impact FinTech Forum, an association to which actually I also belong to. Then he was also the co-founder of the FinTech Association of Hong Kong. He's also the founding member of the Hong Kong Youth FinTech Association, and he was also the Global Startup Ambassador 2021 for the Tokyo Metropolitan Government. Aside from that, he's on several advisory boards and mentor and advisor to several startups, while a regular guest lecturer at many universities in Hong Kong and Singapore. He's also the co-founder of India Tech Hong Kong, a platform bridging Indian and Chinese tech ecosystem via Hong Kong. And well, I think he's also a regular contributor of an author of articles on fintech, Islamic fintech, investment banking, and has been quoted in several media, such as, for example, CNBC, Bloomberg, South China Morning Post, Financial Times, S&P, Asian Investor, Economic Times, etc. So as you can see, it's an amazing profile, and actually a quite unique profile because we're going to discuss this later, but Musheer is in a unique position to be able to discuss both the fintech ecosystems of Hong Kong and China and that of India as well. So that's something quite unique in my opinion. So once again, Musheer, thank you very much for coming today.
Glad to be here and look forward to the conversation. Thank you.
And well, moving forward, I just summarized your biography now in a few, within this last few minutes. And well, we can see that your background was initially in traditional finance. No? So you transitioned from traditional finance to fintech, becoming one actually of the most prestigious fintech voices in Asia or even in the world. So could you please tell our listeners a bit more about your personal journey, especially what made you decide to leave or partially leave this investment management world, traditional finance world, to take this leap and enter the fintech world, which at the time was maybe a bit or not so well developed as it is today?
Right. Look, thanks for asking that question. My roots lie in India. I'm originally from India. I did my engineering, and as you mentioned, I was in the investment management world. I worked as a trader in the fixed income rates and commodities markets of the US and Europe, largely had high volume representation in the CME. And I also led my firm, which is GH Financial / Futures First, their operations and trading desk in Mauritius, which I built up to about 30 odd traders. And went through the whole process of trading through Lehman, Katrina, the financial crisis after Lehman, and all the way through till the first taper tantrum and subsequent changes in the economic ecosystem in the world. What brought me to Hong Kong was after 9 years as a trader, I wanted a new challenge. I wanted to come to a place which I believed was going to be a bridge between the West and China, because I strongly believe that Asia is going to lead this century's economic development, and Hong Kong as Asia's financial hub was just the ideal place for me to come. So came in to do my MBA with University of Hong Kong program alongside the London Business School. And when I was doing my program, I quite actively participated in startup ecosystem courses that were related to innovation. During my London leg of my MBA, I visited Level 39, which is one of the incubation hubs for startups in London, run by the Canary Wharf Group, who are one of the largest real estate players in London, right? Interestingly, they started it after the global financial crisis as a means of incubating younger startups who would eventually go on to take up more space. And we've seen quite a few top startups come out from there. So my exposure to modern day fintech, if I may use the term, was through there, where I interacted and met a few fintech startups. And I was quite excited, and I came back to Hong Kong. And at that time, this is 2015 summer, Hong Kong was just starting to emerge and look at fintech as a major startup vertical. So I got in a bit early in the space, primarily because as a trader, when I was trading, I was an electronic trader, right? So technology was very paramount to the way we traded. If there was 100 milliseconds delay in my trade going through or my order placement going through, I could feel the difference. And in the trading world, technology has been applied for over 3.5 decades, close to 4 decades now, since the 80s. And there you could say that fintech has been around for a while, but traditional finance in terms of investment management had it for a while in the last 3-4 decades. And so for me, it was an extension of looking at how technology is impacting other verticals of finance outside of trading as well. And that's what got me excited into joining in the fintech ecosystem in Hong Kong. Started off with purely volunteering for the first fintech summit in Hong Kong, which was run by FinOvasia, Anthony Tsar and team in November of 2015, where I volunteered to tweet. So I learned a lot during that session. Then when I started work with my previous employer, GracePark Partners, I got exposed to blockchain. And we'll probably talk a little bit more further on about the technology, but they had released a report on how blockchain can be used in capital markets. This is Q4 2015. So, I got an exposure to that. And GracePark does a lot of work around technology and its impact for electronic trading, right? So both from a technology consulting perspective, but also from risk and regulation. So that just drew me in. I found that the world was fundamentally changing with smartphone technology and mobile technology. And as I started getting involved in the ecosystem, we could see that there was a need for a larger organization to represent the needs and as well as the future of fintech in Hong Kong, both from a corporate's perspective, but also largely from a startup ecosystem perspective, to be able to liaise with the regulators, with the government, to be able to bridge that conversation among participants. And hence, along with 9 others, I co-founded the FinTech Association of Hong Kong, subsequently took over full-time as a general manager of the association. Was a tremendous 2.5 years. First year spent running the association as the only employee, but very rewarding and enriching, because I got to learn a lot about how fintech is impacting different verticals of banking and insurance and wealth management, if you want to take that as an extension. Looking at how regulatory approaches are being developed, not just in Hong Kong, but globally, and how that could be further enhanced. And number 3 was building this relationship between different partners in the fintech ecosystem, where we're supporting and helping fintech companies work and collaborate with banks. And yeah, so from there, after 2.5 years of building the association to 1,500 plus members representing 350 plus companies, I decided to start FinStep Asia. As you mentioned, I have a passion towards bridging the India-China startup ecosystem, and FinStep Asia's goal was to be a venture builder to support cross-border innovation and growth of fintechs in the industry. We've subsequently gone on to offer other services, which include being one of the first providers of fintech content for blockchain and fintech companies. So we support them from thought leadership all the way to helping them develop white papers and blogs and marketing content. And we're a niche where we're building a 2-sided market platform. And lastly is we run large-scale virtual and hybrid fintech events focused on Industry 4.0 and now increasingly on the digital assets world and wealth management. So I'll take a pause there and answer any other questions you will want to follow up with.
No, thank you very much for sharing your journey with us. And well, I think, of course, that, as you said before, the FinTech Association of Hong Kong plays a huge role when it comes to Hong Kong's fintech environment. And actually, following this, I wanted to ask you the next questions related to Hong Kong and the Greater Bay Area, since you are, of course, in a unique position to cover this, given your expertise and your past experience in founding and managing the FinTech Association of Hong Kong. So I wanted to ask you, first of all, What do you think about Hong Kong's fintech scene? I mean, what are like its strengths and opportunities, or what's Hong Kong doing better maybe than other financial centers when it comes to promoting fintech?
And I think when we look at Hong Kong, we need to be aware that Hong Kong has for long been this bridge between mainland China and rest of the world, right? And it has not just been from allowing companies who want to enter into mainland and access, but also vice versa about mainland Chinese companies looking to go overseas. That was one big strength of Hong Kong over the last 2 to 3 decades. But other than that, outside of Tokyo, which on its own is represents a significant portion of the Japanese economy, Hong Kong was the financial hub for Asia, right? And it's the third largest financial center in the world as a financial hub after New York, London, right? So what Hong Kong provides from a fintech perspective and strengths is number one, this access to and from mainland China for fintech companies looking to go in or coming out of there, right? It also provides number two, a very stable regulatory environment. Hong Kong's regulations across banking, insurance, and securities are very much on par with the US and Europe and UK, if you want to separate them out, because we have hundreds of financial institutions who have Hong Kong as their headquarter for APAC, and given that their international nature, the regulations need to be fairly aligned. So that's number two from advantages of Hong Kong. Number three is, as an extension of this, is the market is quite rich for B2B fintechs in particular, right? Given the propensity of the fintech companies and the large financial institutions here, you can come in and offer solutions for these banks and others. What is being a big support system for this is enabling regulations. The Hong Kong Monetary Authority in particular has been a leading regulator, not just for the Hong Kong Greater China region, but I think across Asia, being very forward thinking and coming up with policies and regulations which are moving banks and the overall financial ecosystem towards technology. Secondly is we have a strong ecosystem. Close to probably now Hong Kong has 700 plus fintech companies of over 3,500 startups in total, right? And you have startup incubation hubs such as Cyberport, which houses about 300 to 400 fintech startups. Then Science Park, which supports more on the hard, deep tech startups, including fintech startups. So you have a good ecosystem. And lastly, why Hong Kong from a fintech perspective is that you have a significant amount of opportunity for investment in your, in the mature to later stage. Hong Kong being the second to number one IPO destination in the world, we also see significant amount of money going in for startups in the later stages. Blockchain and digital assets world, quite a few of the world's top fintechs have if you're going to call them fintechs, but our blockchain companies have come out of Hong Kong and are based here and have raised significant funding here as well. Yeah.
Yes, I mean, Hong Kong's startup environment, and especially the fintech one, is actually amazing. As you said now, I mean, I myself, I mentor at the Hong Kong Science and Technology part and Cyberport, and I get to work with the most like newest startups in the area, and you can see like so many ideas and this eagerness now to create, to innovate, and at the same time, I mean, compared to other places, a great funding system. The government is very supportive, much more than in other places. So I think everything in general makes Hong Kong's ecosystem quite attractive now in many possible ways. Now you just mentioned as well the Hong Kong Monetary Authority, the HKMA. I mean, as you know, in July, they published this FinTech 2025 strategy, which I'm not going to summarize now, but it, as you know, I mean, it consists of 5 pillars, such as, for example, the fact that all banks need to go digital, etc., etc. So, regarding this strategy, I mean, what do you think about it, and why can it be so important in these years to come?
I think you've without going into the FinTech 2025, we need to be aware that the HKM has been working on fintech for a while before, right? So the roots of it lies in a paper and research paper done by the FSDC, which is the Financial Services Development Council, a think tank which is largely run by the government and backed by them. They came out with how fintech should look in Hong Kong in 2015, 2016, and then subsequently HKMA and others started implementing policies. HKMA started in 2017, 2018 with 7 smart banking initiatives, which included virtual banking, faster payment system. It also included, e-wallets and a licensing regime around that. And that has been very useful for building that ecosystem, but also pushing the banks towards technology in terms of not only operations and back office, but being a differentiator, right? Hong Kong for a long, last 2 decades has been among the most profitable regions for banking, right? For example, 25% of HSBC's profits are from the Hong Kong banking region, right? And most banks are looking at high double-digit growths, high teens growth in revenue in the region. So this is despite having 160 plus banks in the city. So you would have, there wasn't the needle to be pushed was not as simple as in other places where there's a big demand for change. Here, being a high penetration of banking both for individuals and as well as for companies, you did not have that urgency for using technology to be a differentiator. However, the HKMA 7 banking, smart banking initiatives, there was that change. And globally, you started seeing that transformation from banks from saying, oh, dismissing fintechs first, secondly, then saying being scared of them to realizing that they need to work with each other. So I think the of this smart banking initiatives, already FPS, which is the faster payment systems, which is one of the first in the world, which allowed for interoperable payments between different payment ecosystems. For example, you could transfer money from your payment wallet like Alipay or WeChat Pay or PayMe to a bank account just based on your phone number or your email address. This at that time, there were very few ecosystems that were allowing for interoperability, and the FPS was a big game changer. Secondly, they are now pushing through the open API ecosystem and open banking, which should be implemented in the next 2-3 years. And now comes the strategy which Oriel mentioned, which is the FinTech 2025 strategy. They have multiple pillars of it, but the first main one is all banks go FinTech. What does that really mean? Essentially, the focus is to make banks a lot more technology first and to use digital as a key enabler for their services. Over the last 2-3 years or 4 years, you could see most of the major banks have spent billions of dollars on digital transformation, and now they have the platform set either to work with fintech companies or technology vendors or do it themselves in terms of making themselves technology first or mobile first or digital first, as you would want to choose it, right? So the FinTech 2025 strategy, I think, is very vital in ensuring that fintech adoption is high. We are probably looking at 80% plus penetration of digital in Hong Kong, based on number of people who own mobile devices. Smartphones rather, and the penetration of smartphones in Hong Kong is among the highest in the world, approximately 240% penetration, right? So you do have that higher propensity driven through by COVID, where people are using a lot more fintech technology. Thirdly is under the FinTech 2025 strategy, we have different elements, including a look at building out a data platform that will provide real-time information on for individuals and institutions who are probably slightly more covering the informal sector. For example, a noodle cart vendor, right, whose transaction data may not be as transparent or available for banks, but now there's a platform being built through which the vendor could share their transaction details, and this allows banks to underwrite loans for them or provide them financing, right? Number 3 is the EHKD, sorry, which is the central bank digital currency, as it were, for the Hong Kong region to supplement the Hong Kong dollar. And then you have another important element which doesn't get as much highlight as it should, which is Hong Kong's focus on talent development, right? The HKMA has been running the technology talent acquisition scheme and running, that's the government's been running that scheme, but HKMA has been running a 1 year FinTech talent scheme where banks hire third year or final year students for 1 full year for their gap year to come and understand and learn about FinTech and work with the banks, right? And they're looking to further develop this talent base. Talent is going to be a major differentiator across the world. And I think once COVID subsides, hopefully in the coming months, and there's more cross-border interaction, I think that is going to be one key differentiator for Hong Kong.
Yeah. Thank you for sharing this. Now I wanted to go back to something you mentioned before when you were talking about why Hong Kong's fintech scene is that strong. You mentioned the idea of Hong Kong as the gateway to China, which of course is very true. But at the same time, I've always thought and defended, like when writing articles or participating in webinars, that Hong Kong's role as being simply the gateway to China may diminish in these years to come, because the more that China opens up, the less that Hong Kong will be needed just for that purpose. No, I don't mean by that Hong Kong is going to lose its status as a major financial center. I just mean by that Hong Kong will and is actually refocusing. There are like projects like the Wealth Management Connect scheme and many others that show us that Hong Kong is not just about being a gateway to China. And in that sense, I think the Greater Bay Area, the GBA, plays a major role in there. In the whole of Hong Kong's future of its economic system, but at the same time in the whole of Hong Kong's fintech future. So I wanted to ask you, why do you think that the Greater Bay Area, the GBA, can be so important for Hong Kong in the future, especially for its fintech scene? Or maybe in other words, how do you think that Hong Kong's fintech scene can leverage the GBA in order to keep thriving as it is now, or even enhance its current status?
Actually, look, I have a slightly different opinion in terms of, even if mainland China continues to open up, as you know, you probably are referring to the banking license, which now allows majority banking ownership for international banks. I still believe that Hong Kong has a vital role to play in the global expansion of Chinese startups, right? Or companies and banking institutions. And secondly, as a center for internationalization of renminbi, Hong Kong is going to be very important. So that is going to be an underpinning message and theme in the next decade for sure. But also, as part of the one country, two systems, Hong Kong's role in the Greater Bay Area is going to be vital. Both sides. I think the GBA is essentially a culmination of multitude of major Chinese cities in southern China coming together to showcase their strength and leverage off each other's strength. And I'll expand on that, right? The 11 cities, which include Hong Kong, Macau, and the 9 cities in the Guangdong province, primary of which is Guangzhou and Shenzhen. Now, Guangzhou for centuries, if not millennia, has been among the top trading destination of the world, right? And for China, it was the gateway to China for the longest time. In the last 200-300 years, Hong Kong took that title because of being much more closer to the coast than Guangzhou is. However, what we now need to acknowledge is technology is fundamentally underpinning everything, right? And the emergence of Shenzhen, which was one of the first, I stand to be corrected, but I think it was the first special economic zone set up in China post the Cultural Revolution. And it has now grown from a small fishing village on the borders of Hong Kong to this massive city of 12 million plus people and having a GDP that's larger than Hong Kong and the fastest growing major city in the world, right? At 8 to 10% growth. What is important about Shenzhen is Shenzhen for me is the Silicon Valley of the East. And when you look at Shenzhen and Hong Kong's proximity, which not many people may be aware of, we're just separated by a river, essentially, right? When we did the bridge, you can walk across the border in that sense. And Shenzhen is fast coming up in the top 20 financial cities in the world as well. So the combination of Hong Kong and Shenzhen together is the fin meets the tech, right? Shenzhen's technology strength with headquarters of companies like Tencent, Huawei, DJI, and a bunch of others plays a vital role with Hong Kong's financial strength, right? And all the infrastructure that's being built by both governments of both, Hong Kong and Shenzhen, we are seeing that there's going to be a huge interplay between the two cities. I do expect that travel between the two cities, work, etc., is going to get accelerated post-COVID. And you will see essentially this one twin city representing close to 20 million people with a GDP of $700 billion or more, becoming the powerhouse for innovation globally, for FinTech in particular, right? And from there, I feel that's where Hong Kong can leverage is the talent that Shenzhen has, the amazing IP and technology that Shenzhen has been developing that can play a very vital role with Hong Kong's deep expertise in financial services and professional services, which has been there for decades. And that I think is a very, very powerful combination. And given, on the other hand, what now happens with the Greater Bay Area, for the audience, there are new regulations and policies that open up interplay. Orion mentioned about Wealth Connect. There's been the Stock Connect, which allows for trading of stocks between the two regions for a while. So people in Hong Kong, traders or investors can purchase in stocks in the Shenzhen and Shanghai stock exchanges and vice versa. With Wealth Connect, companies and financial institutions can offer wealth products both sides of the border, which typically was not possible earlier or was was heavily regulated. And that starts providing Hong Kong companies, both fintech and financial services, and bigger market. So we are talking about a market that's gone from a 7 million market to now 70 million people. And as I mentioned, among the fastest growing. The GDP of the Greater Bay Area is currently at $1.7 trillion, expected to reach $3 trillion by 2030, which will make it among the top 10 economies in the world, right? So that growth on its own of GBA, I think is exciting, and that provides Hong Kong an opportunity. And combining that strength of fin and tech, the virtual banks in Hong Kong are a classic example of that. A majority of them are a joint partnership or between large financial institutions, mainland Chinese or otherwise, working with tech companies, right? So that gives us an indication of how things can progress going forward.
I agree. I fully agree. And I think this distinction that you made between the fin and tech makes perfect sense. I myself remember crossing the border between Hong Kong and Shenzhen many times before the pandemic, right? And well, I mean, you could clearly see what you mentioned. I mean, you could clearly see, for example, that Shenzhen is maybe more tech-oriented now, in the sense that you saw all those malls where like hundreds of kids play those VR games, for example, things that maybe you didn't see in that exact way in Hong Kong. But at the same time, whenever you went back to Hong Kong, you noticed that their financial area, the financial industry was much more developed. I mean, Hong Kong is so full of banks, and not just physical banks. I mean, now we have all those 8 virtual banks as well, which you just mentioned, and which are a key pillar of Hong Kong's new goals or new objectives or new direction of the fintech industry. So that's actually a clear example of what we said before, this fin and tech area, and why Hong Kong can learn so much, or maybe I should say why Hong Kong can get so much added value, from these other cities, each one of them having different strengths. Or for example, the case of Macau, we didn't mention that one. Macau is very small. I mean, I'm aware of that, but at the same time, it has this unique experience in gaming, tourism, which may be useful as well in the future. I mean, maybe not for Hong Kong, but for the whole GBA ecosystem.
Right. I think there is a lot of value in that, essentially, where the growth is going to come from financial services, but also from technology, as I mentioned just a little while back, right? So from that growth perspective, we can expect newer innovation models. You are also seeing things like, when you're looking at the Enbridge project, which BIS is running. But other than that, there's a lot of cross-border regulatory action that is taking place in financial services, which is essentially helping PBOC and Chinese regulators understand the global regulatory frameworks better and work with more partners as they open up and as they take the regulations on the global standardization level. So yeah.
I mean, there are so many topics that I would like to discuss with you, but I mean, we cannot dig deep on those today, no, because there is this MCBDC bridge project, of course, virtual banking in Hong Kong, but let's leave it for another time. Now I would like to ask you about something that is that affects you very much, because you said before, no, that you are from India. So I wanted to ask you about India, FinTech in India, FinTech in India and Hong Kong. No, I mean, as we spoke before, you have this strong passion to reach India and Hong Kong and the GBA, and you initiated several programs to connect these two ecosystems, in particular as co-founder of India Tech Hong Kong and with FinStep Asia as well, working with government and industry participants alike. So why do you think these two ecosystems, India and Hong Kong / GBA, should be connected, and how do you think each one of them can leverage the opportunities offered by the other?
I think when we look at India and China, right, we're talking about the world's most populous countries, and subsequently in 10 to 15 years time, China is likely to become the world's largest economy, and India is likely to move up to third place, if not by 2030, 2035, by 2040 for sure. And as neighbors, there is already a large amount of economic activity that takes place. So in my opinion, the two countries will continue to have a lot of economic, cross-border trade and economic interaction. And FinTech is going to play a big role, considering how game-changing it has been as an influence on both sides, right? India and China have enabled and brought in millions, hundreds of millions of people into the economic formal banking ecosystem through various financial inclusion schemes, largely led through technology schemes, right? Whereas in China, we had a lot of growth led by private firms like Tencent and Alibaba and Baidu and a bunch of others. In India, we had infrastructure being built up on the tech side by the government through FTAHK, and now we're seeing these horde of unicorns coming through. The biggest ones still tend to be in mainland China because they're probably 4 to 5 years ahead of India in the curve, but India's catching up quite fast. For example, this year in 2021, India saw 42 unicorns, of which about 40% were FinTech unicorns, right? And you also saw quite a few IPO exits, including of India's most valuable unicorn at that stage, which is Paytm, which has a significant Chinese startup, Chinese company investments from Alibaba as well as Ant Group. So you have seen there is a lot of overlap and engagement between the two ecosystems. India is growing from a per capita base of $2,000 currently, while China is at 10,000. And so we do expect that India is aiming for a 5 trillion economy in the coming years, which would then increase our per capita to close to 4,000 USD, and in urban cities in India, we already are looking at 10 to 15,000 USD as per capita, right? So when these growth happens, there is a lot of interaction. There will be, I think, opportunities on both sides, but more so, I think from a trade perspective, there will continue to be interactions and engagement, and hence I feel Hong Kong as this base where there've been, we have tens of thousands of Indian origin people here in Hong Kong, and Hong Kong has been a base or a bridge between the two countries, and I see that continuing in the coming years.
I see. I think, though, I may be wrong, but it must be a bit challenging, to try to bridge both ecosystems, because I don't want to discuss politics, but I mean, there is a clear rivalry between both countries. Both are like China and India, big countries, which are like growing enormously when it comes to their GDP, population, So I reckon like leaving any kind of politics aside, but just focusing on the more economic side, there might be challenges. I don't think it's that easy what you're doing.
No, it's a longer term conversation, right? Irrespective of geopolitics, I do believe that their business will continue. A classic example of that is the US-China relations, right?
Mhm.
You have much more angst or differences between the two ecosystems. Yet business continues to a certain extent, right? And trade continues, and there is engagement. So I think that will be there. Geopolitics does play a part right now. The countries are facing some geopolitical tensions based on actions that took place over the last year, primarily in 2020 more than 2021. However, we are seeing more reconciliation. The conversation is on trying to come and bridge those differences. And I do strongly hope that this happens. I feel right now for all countries, the focus is on tackling the pandemic and coming to a strength post-pandemic. And once things settle down there, I do believe it will continue. Even if there is rivalry, even if there is politics attached, I do believe there still will be business between the countries, and there are dependencies on a variety of different industries. And based on that, it is something that we look forward to. I have engaged with government bodies on both sides, and generally, when it comes to this engagement, they have been positive over the last few years, and we continue to do what we can. And hopefully, once the politics and geopolitics settles down, we will have more to build on.
No, I mean, I hope it will. I mean, we are living in a strange world right now, so what we need is more cooperation rather than any kind of feud between. And I'm not just talking about China and India. I'm talking in general between any countries. And now focusing only on India. No, I mean, India is, as you said before, undoubtedly like one of the fastest growing fintech markets in the world, having, like, if I'm not mistaken, the highest fintech adoption rate globally, of 87%.
China, correct. Yeah.
So can you please share with our listeners a bit more about the Indian fintech ecosystem? What opportunities and challenges do you see, at least for these few years to come?
So the Indian ecosystem has grown tremendously in the last 3 years in particular. You did have, some of the older fintech companies have been around for 10, 15 years, primarily Paytm, MobiKwik, and a bunch of others. However, the game changer was the Aadhaar biometric ecosystem built on what's known as the India stack. So Aadhaar is a full identity which is recorded, where the biometrics are recorded and stored in a central database. India has mapped out 1.2 billion people's biometric identity, and that now provides a base for a bunch of other services that you could provide. Right now, the India stack is important because it is a digital infrastructure stack which provides connectivity and various elements of technology for supporting different use cases, of which financial services is among the main ones. There is the unified payment interface, which is again similar to FPS, interoperable ecosystem, which allows people to make real-time payments at zero to no cost. And that has been a game changer because it works both from a smartphone, but also from a feature phone perspective. And the numbers there have been significantly high. I think they've just overtaken mainland China when it comes to real-time payment mechanisms globally, and goes into trillions of dollars. So that's one side. So payments is definitely a major play in India. What we are now seeing is, because internet penetration has more than doubled over the last 4 years, led by some of the world's cheapest data cost, we are now seeing the fintech companies move up the value chain in financial services. So lending has become a major play. So a lot of the payment players are also in lending. So that's the second major growth area. Third area we are seeing is on the digital banking, more so from a SME perspective, where quite a bit of focus is coming in on that. While banks are also looking to improve their services for mobile banking. So those two are getting locked. The one space where I see significant opportunity besides these two, right? We have to keep in mind that only 700 million or 1.3 million or 1.4 million Indians are having internet connection. So as that grows, the opportunity lower down the value chain in terms of payments, etc., will continue to be there, right? And as per capita increases, so if the aim is for us to become a $10 trillion economy in 20-25 years time, then we're talking about per capita going up to $8,000 to $10,000, right? US. So there is that opportunity in the longer run. So these payment players, the lending players, will play a big role. On the other hand, a space where not only there is an opportunity in India, but also in mainland is on the wealth tech space, right? So India, only 1 to 2% of the population traditionally invest in stocks. But that is starting to grow. We're also seeing huge interest in crypto from one side. But I do believe wealth tech and wealth management, digital wealth management is going to be a massive opportunity in the coming years, as is going to be insurance. Because penetration of insurance in India from a personal and medical insurance is not as high as in say the OECD countries, and that's one of the focus areas for the government. So payments is moving from being universal to being more tailor-made and getting more vernacular, getting more for provinces or states as we call them in India. So getting more customized. Lending, which is their different models, BNPL, the buy now pay later model is picking up trajectory quite largely. Third, as I said, banking for SMEs, digital banking for SMEs, and number 4 and 5, wealth and insurance.
I see. Well, thank you for sharing it. It actually looks exciting. And well, unfortunately, it's the end of our discussion now. We should be wrapping this up. I mean, there are like so many topics that I wanted to discuss with you that we couldn't because we lacked the time. I mean, I wanted to discuss virtual banking in Hong Kong, cryptos in India. I mean, there are many more things that I wanted to dig deeper on. We couldn't do it today, but I hope we can do it some other time. But I would like to thank you, Musheer, for this great discussion and for sharing your thoughts with me and with our listeners, of course. So thank you very much for your time today.
A lot for having me, real pleasure, and I look forward to interacting with your audience. They can reach out to me anytime.
Sure. Feel free to connect with Musheer as well on LinkedIn. He's always very active, posting like very interesting news and reports. So feel free to follow Musheer and follow me as well. And thank you very much again to all of you for listening to this new episode of my podcast, A Digital Tomorrow. Stay tuned for the next episodes. Thank you.
Thank you.